What is up, everybody? This is S Trades, and in this video I'm going to be going over a trade recap of 2 days, which was Thursday and Friday, which was April 3rd and April 4th. The reason I wanted to go over them is because we're in a very, very new market conditions at the moment. As you guys know, we are just dumping. We're in a very heavy bearish market, and I just kind of wanted to share some thoughts and the two trades that I ended up taking, and like what was my thought process and everything. So I thought it would be very educational and again packed with lots of knowledge. So without further ado, let's get into the video. So as you guys could see on Wednesday, after hours, we had a pretty massive dump. It was due to Trump's news about tariffs. So he pretty much just dumped like 1,300 points, and then market ended up kind of pushing back and retracing to this big 4-hour and 1-hour fair value gap, right? So I wanted to see a reaction from that, and I was actually bearish, right? But we had they didn't have much opportunities. Well, we did have a few, but I ended up actually missing the shorts. So now I was kind of just, staying patient and waiting for my setup to occur. So in this scenario, right, we ended up opening at, where were we? We ended up opening, kind of pumping up a little bit, taking out these highs. And I was pretty bearish, but then I wasn't able to take any shorts. We ended up coming all the way low, taking out the Asia low, right, with lots of displacement. But then right after, we saw an immediate reaction, right? So I was like, okay, here it kind of extended, right? And I wanted to see some sort of retracements back into these levels, right? And I set a condition for myself saying that if this 5-minute right here gets inversed, I might be looking for longs, right? So this is exactly what happened. We kind of took out, like I said, the Asia low, and then right after, we saw an immediate reaction. We also had a 4-hour fair value gap right here that I don't know, for some reason got deleted. So we were holding the 4-hour fair value gap, right? And I was like, okay, we saw an immediate reaction, right? We had this 5-minute get inverse right now. I didn't rent it right away on the 5-minute. Instead, again, I set a condition because the market is super volatile. I was like, okay, I want to see a market retrace a little bit into the 5-minute gap, and then I'll take a 1-minute inverse on a smaller time frame, right? So this is exactly what happened here, right? Right here, we closed on the 5-minute, right? If I ended up kind of taking the position over here, I would have been in drawdown like 50 points, right? And so that's why I was like, I want to see kind of more confirmation, because we're in a heavy bearish market and we could just dump any second, right? Like, I don't want to be risking longs just because, I think it would work. But in this case, I set a condition and it ended up working out. So what happened here is we ended up inversing the 5-minute, came back, then we inversed the 1-minute. So the moment we inversed the 1-minute, I entered on it, right? We ended up pumping higher, right, as my entry. It was pretty good, pretty decent, right? And they're popping high, kind of came back to retrace. I did not go break even here because I wanted to go break even on this zone right here. This was just more of like a discretionary thing. I don't know, I didn't like this level to be a break even point, because that's kind of where the 5-minute was inverse. So I didn't break even here, and thank God I didn't, because I would have got stopped out if I break even over here. But then anyways, we ended up pumping all the way high, right? So once we broke where are we? Yeah, once we broke this level right here, I ended up setting my stops to break even, and we ended up pumping quite a bit. Actually, we went all the way up here. My TP was on this level right here, this high. It was just a very obvious high, and that's kind of just what I was targeting, a little higher than that. And we got very, very close to it, and I was pretty confident that we're just gonna go and take it. But we ended up kind of just selling off again, and I was very, really worried right here, because I thought I'm just gonna get break even. And my entry was actually even a little bit higher. It was literally like right here. My fill was just not really good, and I really just got edged by like a tick, literally, like not even a point. My break even was right here, and then price ended up coming all the way lower, almost stopping me out, but I still held through the trade. And then again, we saw an immediate reaction after that. Once we inversed this 1-minute, I was pretty confident that we're gonna deliver higher, so I didn't even move my stop losses or anything. I just kind of held it through, and I was pretty confident in my drawn liquidity, which was this high right here. And eventually, it was a really, really choppy trade, right? We broke this high, and then we started to kind of sell off again. And then I was like, okay, we could potentially see the liquidity sweep of these little two stacked lows, which is exactly what happened, right? We swept those two lows, and then again, immediately we saw a reaction going all the way up higher, and then we finally took my TP. Now, if you want to see a video of that, go ahead and check my TikTok. I showed exactly what was my entry, what was my stop loss, and everything, and all that Good stuff. And let's now head into the Friday. Now heading into Friday, uh, pretty much saw again same scenario, right? We just dumped again, right? Um, after this move on Thursday, after market and pre-market, we just kind of dumped again, like another 800 points. So again, I was really bearish. I was really bearish. I was looking for my bearish plays, and surprisingly, I just caught another long, right? I was looking for my bearish plays, but I don't know why I couldn't catch anything. Like, so we had one setup right here occur, right? We had this 3-minute fair value gap that got inversed, and it ended up pretty much delivering, right? We inversed pretty nicely, and I was gonna enter this, but the stop was pretty high. It was like almost 140 point stop, and we didn't really tap into anything significant over here, so I didn't really see a reason why I should enter shorts, which and like discretionary wise, this was really a good trade for me because I knew that we were just gonna go lower, and pretty much what we did. So I set my limit like literally over here at this fair value gap at this 5-minute, but we ended up just edging that 5-minute and just dumping lower, so I didn't have any entries in there. But then once we came all the way low over here, I had a line drawn over here, but it was pretty much a previous month's low that we took out, right? And then there was a 4-hour fair value gap that we were also holding in the same exact zone, right? So what happened here is after taking out that monthly low and we were still holding the 4-hour, I kind of wanted to see another long. The only reason why is because we were super extended again, and we had a 15-minute fair value gap as a very good target as my draw on liquidity. So what I did was I saw this immediate reaction after taking the monthly low. We took out the low, and then boom, literally the next candle ended up pumping up higher and inversion on the 1-minute. So I took the 1-minute entry, which was pretty early, right? Because we had another 3-minute over here. But what I did was, part of my strategy is that if I take like a shorter time frame fair value gap inverse, then I will just break even at the next higher one, right? So in this case, I took the 1-minute inverse, right? And then the moment we pumped into that 3-minute, I just set my stop to break even just in case, again, if my idea was wrong. But as you guys could see, the 3-minute ended up also getting inversed right here. So once it got inversed, I was pretty confident in my drawn liquidity that we're going to deliver higher. And this was, again, a very decent trade, I would say, because it was 11 a.m. open low high close. We had a little 11 a.m. Reversal. But my original stop loss and everything was pretty cooked actually, because I did not set my stop loss at the low because it was 110 points and I did not want to risk that, which was in hindsight not the best idea. But we were very volatile, and I entered in a small position. I entered only with 5 micros, but the 5 micros ended up delivering twice. We literally got a 200-point move, and then the previous trade was like a 140-point move. So both delivered very nicely. So I had my stop loss like around like 60 points. I went break even once the 3-minute got hit, and we delivered quite nicely, right? We inversed the 3-minute. Once we did that, I was very confident. I had my stop losses at break even, so it's pretty much a risk-free trade. And after that, we pretty much just went up higher. I took a partial over here at this zone, and then the final TP was this 15-minute, and we literally just like smashed that take profit. And yeah, that was pretty much the 2 trades that I took. And the reason why I wanted to show you guys this is because the market conditions are changing at the moment. We are literally pumping and dumping thousands of points without an issue at all, something that we've never seen before. And if you guys aren't able to adapt to these new market conditions, you're either just going to get left behind or you're going to be taking losses. So previously, if I had like certain rules where I wouldn't enter like 11 a.m. or I wouldn't enter like Friday p.m. or whatever, but as I saw that market conditions are becoming very volatile and Trump is pretty much just moving the markets like literally 2,000 points in 2 days. So I was like, okay, we tend to be very volatile, and I expect for us to be even more volatile because he's bringing up more news and stuff. So that's exactly why I traded Friday p.m. and I was fine with that. Which was why I took this Friday afternoon kind of trade, not afternoon, but 11 a.m. trade, which was not a decent setup if you talk about like a year ago or 2 years ago when we had like somewhat of a stable economy. But even later right here, we had a 15-minute fair value gap over here, right, and then this 5-minute ended up inversing over here, and then again I delivered 56 points. So I didn't take that because I was done with the day. I was pretty much satisfied with my profits. But yeah, if you guys are trading these market conditions, be very careful because it is extremely volatile. Like, we never had these kind of volatile conditions before. This is the first time I'm seeing 2,000 point dumps like over a day or two. Like, this is so crazy. Um, but like I said, if you're not adapting to these market conditions, you're gonna get left behind. So yeah, I felt like that was a very educational thing that you guys might have needed to see. And yeah, just pretty much you either preserving your capital during these volatile times, or you're capitalizing on the volatile times. You have to size down. Obviously, you can't trade with the same size as you would every single day, which is why I kind of sized down here as well. Both of the trades were 5 micros, and we were actually in the price limits. Like, that was never hit in the times that I was trading. But pretty much, if you get hit within like a 5% rule or the 5% move, your prop firms, your brokers aren't really allowing you to trade anymore because it's extremely volatile. And we were actually hitting the 5% rule, so people weren't able to really trade. But once we got above it, then people were again able to trade. So that again just shows you how crazy and volatile the markets are. But anyways, yeah, that was the video for you guys today. Kind of just went over trades on both Thursday and Friday, April 3rd and April 4th. And if you continue on trading for the next week, just be careful with your capital. Size down. Wait for the A plus setups. And yeah, if you guys are following along with my bootcamp, some of these things are should be starting to kind of pile up together, starting to kind of understand and make sense in your head, like what are the fair value gaps, inverse fair value gaps, liquidity sweeps, and all that sorts of good stuff. So if you guys still don't understand what I'm talking about, go watch my previous bootcamp videos, and I will see you guys in the next video.